Hey guys, this is Dr. Tom Carr of drstocks.com, drstoxx.com. Hey, it is Thursday evening, October 6th, and we are heading tomorrow morning into the monthly jobs report release. And of course, that's always a big event, especially as we get toward the end of the year. And the Fed has only made one tiny little rate hike, and all eyes are on that jobs report tomorrow to see whether it will fuel the fire of the Fed raising interest rates again before the year is out. I myself think they will not raise in November prior to the election. That would not be wise. And unless we see some inflation data coming through, I don't think we're going to get a rate hike in December either. But we'll have to wait and see on that. I wanted to look at three charts real quickly tonight. First up is the S&P 500, represented here by the SPY SPY ETF. And just to point out a couple of things, this is a fairly bullish chart. We are clearly in an uptrend with the 50 period moving average rising steadily higher. We've got the 200 period moving average rising steadily higher. The 20 period moving average is a bit up and down, and it's now flat. So this would be what we would call a weak uptrend. Price has lately been hugging around the 50-day moving average, which is typically a bullish sign when it's rising. We did have this little down fall here that was a few weeks ago. And my gosh, I'm forgetting exactly why that was, but it was a pretty obvious thing. In any case, let's draw in some trend lines here. We've got our simple major trend line there, and you always, in an uptrend, start with the support line, and then you make your resistance line parallel to that. So that would be our major trend. We're obviously consolidating here with this several week long period of sideways trading. Never much fun to trade stocks in a sideways market like this, but it is in essence bullish. And so I am expecting an upside break here come next week, but you never know. We could get a really high jobs report, strong jobs report tomorrow, which would raise rate hike risk, and that might get people running for the exits, at least short term. You want to watch out for this support line here breaking on any downside move. We do have some some support in the area of the lower Bollinger Band here around 211. And then way down here at 204, 205, we have the 200 period moving average. I don't see it getting that far. The next chart I wanted to look at quickly is not that one. Here we go. It's the chart of the gold miner index. Obviously, gold has been trading off as interest rate risk has been rising, and the miners have been trailing off with gold as well. But I do think we might be at or near a short-term bottom here. If we draw in a support line that would look like something like that, and then your resistance line, something like that, we are clearly in a short-term downtrend, but we are at the rising 200 period moving average. We are outside of the Bollinger Band 3 days in a row. That usually doesn't happen, and so that's an unusual. We have this huge bearish volume spike here, which signals a short-term bottom. Longer term, we may see gold and the miners with gold trade well below where they're at today, but I do see, at least over the next couple of weeks, strong possibility of a nice little bounce here. And if you're playing the 3x leveraged gold mining ETF, which is NUGT, Nugget, you can really get a nice gain if you get a 2 or 3 day move to the upside. Your price target in a move like this would be the 20 period moving average, which on GDX is right around 26. Looks like, so a couple dollars, maybe $3 ahead of where it is now, about a 12% move, not too bad. You would leverage that 3 times with the Nugget NUGT, so that would be a 36% move, which would be pretty good. One of the tips I want to throw out there, though, I learned this from John Bollinger himself. He's the author of the Bollinger Bands, that when you get an initial thrust below the lower Bollinger Band, you typically get a very minimal amount of bounce followed by another lower low within the Bollinger Bands, and that is your buy signal. So we may in fact get a very weak little bounce here of maybe $1 or two on GDX, and then another rollover to a lower low, perhaps $21, $22 per share. That's the one that you want to buy because you're clearing out all those weak hands. You've got a lot of the bearish supply out of the way, and then the index is more likely to rise in a steady fashion at that point. So look out for that lower low, but it wouldn't hurt maybe to put on a starter position here at this point. Again, very short term. I do not like this chart longer term. It just looks way too bearish, way too scary. And then the third chart I wanted to throw out at you is the chart of the Biotech Index, which sold off today quite sharply in contrast to the rest of the market, which held pretty steady. Not quite sure why. I didn't follow any of the news on biotech stocks today, but I'm sure some of the usual suspects, some of your bigger names, Guild and Biogen and Amgen, were weaker than the market average. What we're looking at here, though, is something like an inverted head and shoulders, which you can find both at the bottom of a downtrend and at the top of an uptrend. And in either case, it's bullish. But of course, it's only bullish once it breaks out to the upside. We do have your left shoulder right here and your head down here below, and then your shallow right shoulder off here to the right, kind of a complex right shoulder. It almost looks like little inverted head and shoulders all unto its own. And complex shoulders are pretty typical, nothing to worry too much about. But what we would want to see is a breakout to the upside, which we haven't seen yet. In fact, it's moving in the opposite direction. But what I do want to point out is that the volume balance here is very high. The volume balance has not been selling off in response to the downtrend the last couple of weeks, and that is that's very bullish. When you see that, you see a contrast or divergence between an indicator like this, especially the volume indicator, then oftentimes these divergences will act as leading indicators. So I'm actually a bit bullish on the biotech index over the next couple of weeks because of the volume accumulation of shares, because of the pattern that we see here in the chart. But I would want to see it begin to move back up, and especially get back up above the 50 period moving average, which right now on the IBB is at about 290. So I'd like to see it get back up above 290 before I got too excited about it. All right, that's it for this week. We will see you on the backside on the trading floor. Take care. God bless, guys. Bye.